Stop looking at the stock chart for a second. You are missing the most important signal Tesla has given us in 5 years. Yesterday, in Austin, Texas, a Model Y was spotted cruising through the South Congress neighborhood. It navigated traffic, handled intersections, and dodged pedestrians. But here's the part that Wall Street algorithms are just now waking up to. There was nobody in the front seat. No safety driver, no engineer hovering over a kill switch, just an empty seat. This is the occupant-free milestone we have been waiting for since 2020, and the market knows it. Tesla just smashed through its December 2024 resistance to hit a new all-time high of $481.37. Is this just another hype cycle, or did the fundamental value of Tesla just change overnight? Today, we're breaking down the Wedbush $600 price target, the specific regulatory implications of this test, and why 2026 might be the year the shorts finally surrender. Let's dive in. Welcome back. If you're new here, my goal is to make you the smartest investor in the room, so hit that subscribe button because we are tracking this 2026 portfolio in real time. Look at this chart. For the last 12 months, Tesla has been coiling. We hit $479 back in December 2024, and since then, chop. Volatility, doubters calling for a crash to $200. But yesterday, December 15th, we didn't just nudge the high, we broke it. We hit $481.37. Why? Because the market is forward-looking. When you see a car driving itself with zero human occupants, the risk profile of the company changes. We're no longer pricing in a car company with shrinking margins. We're pricing in a SaaS monopoly. But here's the catch. Wall Street is divided. Half say this is a bubble. The other half, led by Dan Ives at Wedbush, just slapped a $600 price target on the stock. Let's look at his math. Most people think the occupant-free test is just a cool tech demo. It's not. It's a regulatory key. Here is why this matters. To get a commercial license for a Robotaxi network, like Uber but cheaper, you need to prove to the TSLA and local governments that your car doesn't need a babysitter. Waymo has done this, but they're geo-fenced. They're stuck on pre-mapped rails. Tesla doing this in a complex, unmapped environment like downtown Austin proves the general solution is working. If Tesla can run these occupant-free tests for 30 days without an intervention, the path to a commercial license in Texas opens up in Q1 2026. That is the moat. Once they get that license, they can turn on the money printer. We aren't talking about selling $50,000 cars anymore. We're talking about high-margin ride revenue. So let's talk about Dan Ives. He's been the biggest bull on the street, and yesterday he doubled down. He's calling 2026 the monster year for Tesla AI. He believes Tesla is on a path to a $2 trillion or even $3 trillion market cap. Let's do the math on his $600 target. Right now, we're at $480. A move to $600 is another 25% upside. Ives argues that the market is currently valuing Tesla's AI business at zero. He believes as the Robotaxi revenue becomes real in 2026, the stock re-rates. Think about it. Apple trades at 30x earnings. Nvidia trades at 40x. If Tesla shifts from selling hardware, low multiple, to selling software, rides, high multiple, a $600 stock price isn't hype, it's just math. Now, I have to be the voice of reason. I'm not here to pump your bags, I'm here to protect your capital. We're at an all-time high. The RSI, Relative Strength Index, is hot. The Fear and Greed Index is flashing extreme greed. Historically, when Tesla breaks an ATH, it tends to have a blow-off top followed by a sharp cooling-off period. Remember, the macro environment is still tricky. We have tax loss selling happening right now in other sectors, and if the broad market dips, Tesla will get dragged down with it. If you're a long-term holder, 3 years plus, this price action is validated. But if you're a trader looking to enter today at $481, you are chasing the train. There's a high probability we retest the breakout level at $460 before we march to $500. Here is my verdict. The empty seat is the real deal. It separates Tesla from the EV pack once and for all. The $600 target is realistic if regulatory approval hits in 2026. I'm personally holding my core position, but I'm setting buy orders at $450 and $460 to catch any volatility dips. I'm going to be tracking the Texas regulatory filings every single day this week. If a license is granted, this stock goes parabolic. Do you want to know the second that permit is filed? I'll be posting an update the minute it happens. Make sure you're subscribed with notifications on so you don't miss the alert. And let me know in the comments, do you trust a Tesla with no driver yet? Yes or no? I'll see you in the next one.